But let's take stock of some of these housing finance companies, understand the impact of rising interest rates on housing loans, what the margin roadmap is, as well as the growth levers. To discuss that and more, we've got Girish Kousgi, who is the Managing Director and CEO at PNB Housing Finance. Thank you so much for taking time out and joining us. Now, to begin with, just looking at the overall picture, we have seen credit growth in housing finance companies that has been led mainly by a continued improvement in disbursements. Can you just highlight some of the key industry growth triggers and what the outlook is for the sector as a whole?
Good morning. I think if you've seen, market has been pretty good immediately after COVID, which started from the year 2020, October onwards. I think demand is quite robust. And no, looking back from that point in time till now, there was a slight dip in quarter one that was due to COVID second wave. Otherwise, if you see the real estate space, it has revived and the trend is very, very positive. And this uptrend will continue for next 4 to 5 years. And in terms of affordability, in spite of interest rates going up, it's still quite high. So affordability is high. Property prices are increasing, but still it is pretty high. And construction cost, building cost also has gone up. But the demand is so robust that in spite of rates going up, I think the demand is increasing and the performance of the entire sector, most of the housing finance companies and NBFCs in this space, they are doing well. So this will continue for next few years. I think I've always said that housing finance space, we are in a sweet spot, and next few years will be really a great story for the sector.
Just wanted to understand, Mr. Kousgi, how is it that you see your lending book shape up in the next 1 to 2 years? And what sort of AUM growth target have you set for yourself?
Yeah, I had mentioned this before. So this year we'll be able to grow disbursement by about 40 odd percent, and book growth would be close to 10%. From next year, for next few years, we'll be able to grow at about 22 to 25% on disbursements and book growth of 17 to 18%.
Good morning. So, that's how we're talking about how demand is really going to be going up. But the question also is that the strategy as far as retail loans go, do you see the share of corporate loans going down even more, which will be offset by the retail loans? Is that what's happening and the trend that will continue?
I think talking about PNB housing, our focus is largely going to be on retail. Within retail, our focus is going to be on prime and affordable. Affordable for us is a new segment. We have just started now. I think we'll be scaling up on affordable space. Today, if you look at the retail book as of last quarter end, we had book of 52,000 crores. So that book we will grow and we will get into affordable segment in a big way, which would start from quarter four onwards. So as an enterprise, the focus would be largely on retail. On the corporate front, today the book is about 5,700 as of last quarter end, and we need to do some work on the delinquency. So we'll try to bring that down and restart. And when we restart corporate book, I think it will be into construction finance, more from a strategic perspective to enable retail business. I think that's going to be our strategy. And of course, we will keep the ticket size low, in the share of space. So to a large extent, I think going forward, the story is on retail space.
How much of your current book, if you can split in two parts, is salaried and non-salaried?
I think today, if we look at, it will be, almost 50 and 50. Even though incrementally we are seeing that there is a lot of skewness towards salaried, we want it to be that way. And going forward, we would also ensure that we increase our salary share and bring down self-employed.
But everybody is trying to do the same, whether it is SBI or PNB, whether it is Can Bank or HDFC. Everybody wants to lend to the more salaried borrower. And that's where I guess the challenge is, because there is a limited pool available and everybody wants to go for that pool.
Actually, yeah, you're right. A lot of institutions, be it banks, HFCs or NBFCs, they are now getting into more of salaried. I think that's true. But at the same time, the market is quite large. It's a huge segment. It's a huge segment, and there is no dearth for business even in the salaried space. And also, why a lot of these companies are getting into salaried segment is because I think there the risk is low, default risk is low, and therefore, you will see better delinquencies in salaried vis-a-vis compared to self-employed. Now, having said that, I think this, India has thrown up a lot of opportunity, on the business side, and therefore there will be focus on self-employed also. But I think comparatively, the skills will be more towards salaried.
Could you also highlight what sort of asset quality trends are you seeing right now, considering we were just talking about the classification of loans?
We going forward, I think let's say starting from next quarter, you will see improvement on the retail delinquency, on the retail NPAs, GNPA. So it will keep coming down for next few quarters. As of now, for us, it is slightly on the higher side, but we are doing a lot of work on the NPA front. So we will see this trend will improve, and you will see in next few quarters it will be at a comfortable position.
So, when we saw the pickup in the real estate market, it actually began from Bengaluru. And at that time, we said it was because, the ITS professionals were making a lot more money. The startup capital was also paying employees so well. So when we are starting to see layoffs, mass layoffs that are taking place, hiring which is also slowing down, can I ask you, as a housing finance company, there are no jitters, therefore, that could impact the housing market, which is, recovered after 10 years?
What you're saying, it could happen any point in time. So it happened in the past. It's not that this is the first time it happened or it's going to happen. It has happened in the past. I think, as an enterprise, company has to be very clear in terms of focus and vision, and they have to diversify the risk. For example, probably a company should not take too much of concentration, risk on one particular sector. I think if we can diversify that and manage, I think these are all part of business risk. So we can't really undo some of these things, but we can definitely manage. And this is not the first time, we are facing this kind of threat. It has happened in the past, and a lot of companies, indeed have managed. And also, I think today, there is a big fungibility aspect. So even from ITs, we've seen people moving into other sectors. So I think if there is a need, and I'm sure this would, I think India is the first country, where Indians would adapt quite quickly. And we've seen this in the past, whenever a particular sector is not doing well, I think the fungibility factor is very, very high. People adapt and they move to other sectors. So in given that context, I don't think so it is a risk which can't be managed. But having said that, I think most of the companies would manage by diversifying the risk, not focusing on a company or a sector. So they would diversify, A, in terms of profile, B, in terms of company, 3, in terms of sector, 4, in terms of geography as
well. Okay, so not overly worried about that. The momentum in the property market expected to continue by the experts, whether it's the developers or the housing finance companies. Thank you so much for joining us live today and talking to us about the immediate outlook. This is a counter that has been in focus along with other housing finance companies, today trading along the flat line with a negative bias.